All right, good morning, ladies and gentlemen. Welcome to the ping pong market that is the stock market. So yesterday we ended up with elevated volume day on the downside. I kind of thought the market would react a little heavier than it did. It ended up selling off. Okay, volume was okay. It wasn't horrible. We have seen general lighter volumes throughout this last recent. What's up, George? We have seen a little bit lighter volumes, not tremendously lighter. We got heavier over here since this topping area. We're in another topping area with some good news on the overnight session, apparently. So again, news-driven market. Welcome to the roller coaster road that lately has been the stock market. Chainlink had an interesting day. You follow me on Real Crypto, Justin? We've been on Chainlink for a while. Chainlink's been still looking pretty good. My VA tool very elevated, not a lot of selling stepping, even over here some selling stepped in. Over here not much selling. It's looking good. Anyway, so with the overnight session in the markets here, we have oh, okay, cool. Yeah, with the overnight sessions apparently some good news, really big job numbers, which that should scare people in this environment. So anyways, there was a lot going on. Let me pull up an IBD article. It jumped on my phone this morning. Okay, massive 312,000 job gain casts doubt on stock market gloom. The question you got to ask yourself is, which scenario are we in? Yesterday we talked about Ray Dalio and his article that he put out on LinkedIn, and how if the Fed, over tightens or does things too soon, it could lead to, not really stagflation, but a very stagnant market, very choppy market. And then we get the next day, U.S. economy added 312,000 jobs on Friday. Unemployment ticked up. Hourly wages grew 3%. So that's pretty good. Markets open. Let's see what's up. Let's see what's down. CDNA, Mygen, CRISPR, Hermes, today. Netflix is up some. Square, Twilio's up 3%. That cute little red dot or green dot right there is Twilio. Cass is up here. NetEase Goose is up a little bit. INSG, which has been doing really well, is up. INSG's been doing really good. Tesla, Twitter's up a little bit, about 2%. So about doubling the market. Where's Tesla? Always moves on me. Tesla's still chilling down there. Twitter, I'm not sure where that puts Twitter. They were in a little bear flag. Still in a little bear flag. There's a sell-off this morning to start off with. So we'll see what happens here. We talked a while ago about this big range that we put in since this one day here. Now, one thing that was positive with the markets, pretty much until like yesterday, basically, is that we had a lot of closes in the same area. 1, 2, 3, 4, 5 closes or above this level, slightly below the close of that huge up day. That was a positive. We recently, yesterday, undercut that on elevated volume, a little bit of a warning sign. And in a bear market with a little warning sign, undercutting the 10-day moving average, not such a good thing. So we need to get out of the range of yesterday, I think, to be healthier. Until that happens, I think it's risk on or risk off, I guess, if you will. No risky trades, and that's even a minor signal. That's a very minor signal. That's nothing to call your mom and tell her to put all her money back into Tesla again. Type of a signal. There you go. Some volatility in the open went lower. Now we're moving back higher. So let's get back to some of this news. news. It's difficult to figure out this news coming out. I think you should know about it. Like, I know I cover it too. I know I cover it too, but it's really one thing to know what's going on here, and you can know about the U.S. economy out of 312,000 jobs, and China did some. I want to read about the Chairman Powell thing. Where I thought China was in this article. I guess not. China's in the next article. We'll read the China article next. But it's one thing to know how China could affect the U.S. and how these interest rates could affect stock prices. It's very difficult to do. Even the best modelers, get it wrong sometimes. So I really think we just have to use our clear technical signals and avoid, you should understand what's going on, but using clear technical signals for us, I think, is our edge on the market. That's how we can listen to the institutional investors that really, really do drive the markets up and down. Because in the end, I don't care if the market rises on a 312,000 jobs report. I don't care if the market falls on a 312,000 jobs report. I have no say in the matter. All we can do is follow what J.P. Morgan, Goldman Sachs, all these hedge funds, all these pension funds, all these mutual funds do. That's all we get to do. We just get to follow these people. So um, that's it. So most of this new stuff, even though it's factual stuff, most of it's fairly most of it's really noise for us. Like, if do you guys know how to interpret this in terms of stock market rallies and what would be the opposite of a rally? I don't know. I'm not sure the opposite term of a rally, but anyway, or stock market drop. I guess it would just be drop. I was thinking for a nicer word, but anyway, it's good to cover these. You kind of need to know what's happening a little bit, but at the end of the day, do you hang your hat on what the news tells you? I guess that's really the crux of the issue. I don't think you do. I think you hang your hat on what the institutions are showing that they are actually doing. All right, so Fed Chairman Powell on the clock. Robust jobs report sets the stage for Powell. He's going to comment. Hold on, guys. I need some water. Sorry, guys. Wife saw me wandering. I'm like, why are you talking to me now? Miguel, as long as the dumb money follows the news media, there's a impact on price. I'm waiting for the decent government deadlock to be over before I consider shorting the S&P. Justin's waiting for a good time to get in for long-term investing, mostly with index funds and a few of my favorite stocks here and there. Okay, well, yeah, that's a fair assessment. Know your strategy. Know your strategy. That's all. So, um, yeah. So, yeah. In terms of a good time to get in for longer-term investing, all we can really know is, um, I think a lot of Ray Dalio's stuff is really important. To be honest with you, I think that's really helpful. So I always look for stuff from that guy. He's really good from an investor slash macroeconomic perspective. In line with George Soros, although Soros is, I don't think he really trades stocks, equities that much, and he's also not as vocal as Ray Dalio these days. But you have to pay attention to those guys, man, because they've made the money. They've made the money, and if they're willing to share their information, I think it's valuable. So, um, anyway, but yeah, we have to try to distill all this information into should we buy, should we sell. So, um, that's always the thing here. So, Fed Chairman Powell on the clock. The robust report set the stage for Powell, who's expected to comment on the Fed policy on the EAE, AEA, whatever conference at 10:15. Wall Street will key in on whether Fed Chairman revises his December 19th comment that Fed balance sheet wind down, known as QE, quantitative easing or tightening. Oh, tightening. So yeah, that's because he's selling the assets that he bought would remain on autopilot. December jobs report was to be the first of a new era in which investors are no longer worried about future rate hikes. Markets are pricing in zero odds of a rate hike this year and more than 50% odds of a rate cut by early 2020. Those odds reflect a Treasury yield curve that is inverted with a one-year Treasury yield higher than long-term Treasury yields going out to the 7-year Treasury. That's a lot of I've never seen Treasury used in that one paragraph so many times, or one sentence so many times, or even a paragraph. Growth is expected to slow markedly this year with both monetary and fiscal policy turning from tailwinds to be neutral by mid-2019. Pricing something worse than a slowdown could further dampen growth, yet most economists still expect a soft landing as trade war fears recede. Consumer economy and labor market still showing signs of strength. So yeah, I guess we'll see what this Fed guy's got to say. But in the end, are we going to lead into a recession or at least a deeper bear market based on what we read yesterday with Ray Dalio? So that's always kind of the unknown here. How's the market going to react to it? How's it going to discount things? Now, let's look at Apple. We had the huge news out of Apple yesterday. And today we had some good news out of basically China. U.S. job numbers were pretty good. And then Apple now not really trying to fill that gap. Had a big gap down day yesterday. That's a pretty big day for Apple. Apple usually doesn't do that. Market's rallying here a little bit. So we need to see how we close the day on this news, I guess. What the overall sentiment is. Yesterday with the Apple news, I mean, it's kind of like one big thing after another. Everything that comes out seems so huge. In the end of the day, we're still decidedly lower. There's probably another trend line right there that we can draw. So we'll see if we get over these trend lines. If you're looking for longer term investing, you talk about dollar cost averaging. I don't mind that with index funds. I would not do that with individual names. I really don't mind it too much with index funds. At the same time, I think you should be mindful of the larger economic cycle. I think that could be important. How far can they kick the can down to the next stop? The debt's unsustainable. Well, that's not That's not really your concern. To be blunt about it and brutally honest about it. Um, you can position your money in, what are the choices that you have? You have the dollar, you've got gold, now you have crypto, and the stock market. Like, where are you going to place your money? You can buy a house. You can get in the housing market. That's a fifth potential asset class. If you feel like putting a few barrels of oil in your garage, I guess you could try to do that. But where are you going to put your money? Those are the decisions you have. In terms of kicking the debt down the road, we're pretty good at that. We're really good at kicking that can down the road. We're up at 20 trillion now. I don't know. I really haven't seen. I did a little bit of looking about a year ago into ratios of GDP and different factors and debt levels, like with Greece. So let's do that real quick. And see, here's the difference though. Greece debt levels versus GDP and United States. See if we get what I'm looking for here. So, Greece went bankrupt very famously a few years ago. And I don't want to like you on Facebook because I don't like you yet. That's a huge paragraph. Okay, so let me, and that's the thing is that anything they do, I think, to curtail the debt will stifle economic activity. I think. I'm not a huge macroeconomist by any stretch of the imagination. So Greece and United States. So Greece is minus 10% of GDP. We're minus 6.8 of GDP. So they're ranked debt, government debt, public debt, share of GDP. They're at 161. We're at 72. So that shows we could almost triple our debt capacity. I don't want to read all this. There's a lot of stuff to read on my little live stream here. So GDP is, 15 trillion, obviously. There's a lot of stuff. So public debt, 156% of GDP. We're at 70%. So we could double our debt to 40 trillion and then be in line essentially with Greece. But those are very top. Those are two numbers out of probably 1,000 to consider into whether the U.S. can service its debt. So it also comes down to, there's a lot of factors involved. We saw with that Dalio article yesterday about long-term debt cycles and short-term debt cycles and how the governments have tools to kind of steer the economic machine, as he calls it, in one direction or another. Now, we also have the benefit of being the world's reserve currency, so we can print money as much as we want. Greece had to borrow, we borrow from the Fed, but in theory the Fed should be kind of closely tied to the United States, even though it's a separate entity. Greece doesn't have that luxury. This would be like Texas declaring bankruptcy, because Greece was part of the EU, and we have 50 states. This would be like Greece or Texas declaring bankruptcy. It wouldn't necessarily affect the dollar itself. So, if the dollar gets up here, and I think in time it will. We are not on a sustainable track record in terms of our debt. I'm a little bit concerned about it. If and when stuff like that occurs, I think you've got to be quick on the trigger, and I don't know where you would put your money. Maybe you would put it in Bitcoin. There is a possibility of that. How would you spend it at that point? I don't know. Well, it has nothing to do with being encouraging or not encouraging, Miguel. It has to do with everyone's worst fear is Greece. So if you're scared, why are you scared? You're scared because you think we will do what happened to Greece. We will default on our loans. Borrowing will become unsustainable. The economy will tank. This is your worst fear. So you want to see how far are you from Greece. Now, everything else can quasi-sustain itself. Germany can sustain itself. It's a huge, huge economy. U.S., we're a huge economy. We can sustain ourselves. Greece is a little tiny guy, but even by some of those metrics, we still have a lot of room to go in terms of servicing our debt. And I'm pretty sure that while our Congress doesn't care too much about the debt, we have bean counters in the U.S. that know specifically when and at what stages our debt will become unserviceable by our government. I'm not sure if they've released those numbers or not. They haven't, at least in any news that I've seen. So, I don't think us as individual investors have we really shouldn't concern ourselves too much with that. We've been talking about this whole debt thing forever. I mean, if you remember, the U.S. actually used to not issue bonds and debt, and then I think we started to, 150 years ago or something like that. And then everyone was talking about, we're going to go bankrupt, we're going to do this. We've had high levels of debt in the past, and it's come down and gone up and come down. So I wouldn't super be concerned about the debt. I mean, they're big numbers. They're inconceivably large numbers. Who's going to bail out the U.S.? Well, that's our Federal Reserve printing bucks. That's it. That's all it is. Printing dollars. Printing dollars. But what's your main concern, Miguel? A stock market crash? In the end, what I said earlier is, like I said, you can buy houses, Bitcoin, gold, put some oil in your garage. What's your main concern? Losing money? If you're losing money on something that's rapidly inflating, it's like getting more of the Zimbabwean whatever their native currency is, which is inflated like 100,000% over the past year or something like that. So you have to figure out what is your strategy for that. Not worrying about the specific event, but what is your strategy for the event? Does that make sense? And then you just kind of go about your business, and until that strategy is needed. Yeah, probably would be good for crypto, Miguel. Probably would be good for crypto. Absolutely. The question is, do you want to put all your money in crypto? That's another question. You could. You definitely could. It could definitely be a hedge against the dollar, and maybe that is what is the impetus for crypto to take hold in the global market. Is as people don't necessarily know what to do with the money as they see it being more highly devalued. Things of that nature. Okay, so what you're saying is your strategy is you want to short equities when the U.S. starts to fall. Is essentially. Because I think people talk about these things and don't fully understand or fully think through, number one, their strategy that they want to do, and number two, and we talked about this a little bit yesterday in the Real Crypto Power Hour, everybody thinks everything's going to happen right now. And it happens across every aspect of asset class in terms of trading and investing. Everyone thinks it's going to happen now. You always think that the market's going to crash right now, not an hour from now, not a year from now, but now. Not 20 years from now, but now. You know what I mean? Like everything. People think that everything's going to happen right now. Like now, like immediately. And that leads to the FUD and the FOMO. That's really what that leads to. When in reality, all we can and have to do is really sit back, let things unfold as they will. I mean, this is a normal stock market, bear market. Well, yeah, it happened over the past couple of months, but yeah, you can consider that now. But what you were referring to was me not being able to have my lights on in my house because the dollars don't work anymore. That's a completely different scenario. So you shouldn't be concerned at all about the national debt if you just want to short the market. If you just want to short the market, look for a reason to short the market. Don't look for the reason the U.S. economy is going to fail. That's a much deeper and longer conversation. And also analysis. That's, you would be having 2008 like numbers and things not looking like they're working in terms of fixing that problem. You'd be looking at 20% in a very short period of time. Big candles down, huge volumes. Like you go back to 2008, you know, it's not going to be exactly what I want to see, but so like here, you go back to 2008, you're going to see, you're going to see, I guess we do have some big candles up there, but these are some huge, huge, massive weeks, huge selling weeks. These are big, big weeks. These are like 10, 15% weeks. These are huge weeks. 12% there in terms of a range. 20%. And this is 20% in a week right here. You're going to see huge ranges. In this instance, this is what you're looking at right here. I mean, when we bounce and undercut this low, this is everyone, and I'm going to curse right here, shitting their pants. Boom, boom. These 2 weeks here are epic. 30% in 2 weeks. So this is what you're looking at. We were literally on the cusp if they didn't, if Bush didn't pump, what was it, $4 trillion or whatever he put into the markets, or 400 billion or whatever it was. TARP, I think it was TARP was the name of it. Something asset repurchase program. If he didn't do that, you can duplicate this here from the 1,000 level. Basically, we'll be down here at like 700, 300, whatever. So, well, this was actually after, this is, I think, this is where Bush left office. Anyway, but you kind of get the gist of what I'm saying. If they didn't take those extraordinary measures, you would see that continue. We don't have that today. That's not the market we're in today. Going back to what we looked at yesterday with the Ray Dalio article talking about 1937, we could be in a situation where we're going to be choppy, and big chops. If you remember that article, we were down like 32%, up 25, down 19, up whatever. It was pretty choppy. We could be in that situation where we kind of chop around here for the next several years. We don't necessarily have to make new highs, so that's what we're looking at here. We're not really looking at, global economic death, which is what we were facing that in 2008. Like legitimately, banks were closing, and if banks close, you can't lend, and if you can't lend, people can't borrow. People can't borrow, they can't pay their bills. They can't pay their bills, they default on their house. If they can't, the cycle just goes on and on and on and on, and you can see it could lead within about a year to some serious consequences. And the government decided to pump a couple $1 trillion in the economy to stave that from happening, and it worked. It worked. If you remember those days, if you're involved in the markets in those days, it was horrible. I mean, horrible. And anyway, we pulled ourselves out of it, and then now we're starting to pay the piper a little bit, I think, in terms of quantitative easing and things of that nature. The quantitative easing, if you look at that chart, that's been sustaining us, and that's what we're facing right now. Quantitative easing versus stock performance in a chart. Investopedia, no. Oh, that's positive correlation. Not what I wanted. Chart or graph. And we're rallying here out of this news again this morning. Come on, give me a fucking chart. Type chart, Google. I typed chart. Guess I can go to images. Oh, there you go. So there's kind of a. So there's 2009, and here's the green is the total assets held by the Federal Reserve. You can see it pretty much goes in lockstep. I mean, really, truly, you got a couple of downturns here, but nothing major. And we haven't had anything major. This is the first bear market we've had in 10 years. So absolutely, it's something major. But with the Fed reducing their book, that is really. That is the biggest threat to this market, I think right now is the Fed putting selling pressure on the market, which is basically what they're doing right now. They're putting a little bit of selling pressure on the market as they're reducing their assets, which, they got to balance their books too. Anyway, how that leads to our stock market today, whether it's good to buy, is a little bit of a different. Global stocks have been trading lower since last February when world central banks have been slowing quantitative easing. Yeah. So, that's pretty much what I'm talking about. I'm talking about the U.S., but you're referring to global. So I think you're correct there, Big D. That's absolutely right. You think about it, you've got the biggest. We just talked a little bit ago, like what can we control in terms of our performance in the stock market? How can we handle if the government's going to, if our money is essentially just going to evaporate into whatever, via rapid inflation or whatever the case may be. In the same way, I'm not sure what individual companies can do when nation state governments that control the economies start buying and start selling assets. There's not a whole lot you can do against that. Like, we can't push back against Goldman Sachs, and Goldman Sachs as a trading firm can't push back against the Federal Reserve. It's kind of impossible. It's like, all right, Fed, I'm gonna buy you $500 million of this asset, and Fed go, all right, I'll sell $1 trillion of it. They're like, what? No, can't do that. It happens. It happens, and that's. I don't know how they're easing, tightening what they're tightening. I don't know what assets they hold. It's mostly bonds, from my understanding. I don't think they go too much into individual stock market names. Maybe they do. They probably do. But we don't necessarily know how that works exactly. All right, anywho, we got a rally on us 2.4% higher today. Looks like let's move this back to the daily. All right, breaching yesterday's high, which is actually a good little short-term signal. Still have these highs to contend with before we're kind of in a healthier rally. We're still in lieu of a follow-through day. We still have the bottom of the market in on this day. Forget this day right here. This is futures. So this is the bottom day of the market. So we're day 1, 2, 3, 4, 5, 6, 7 days into the market, and we're still looking for a follow-through day. So, the Apple news was really bad yesterday. I still don't like that Apple news. But if you get a follow-through day, you got to go with the markets. Now, we also talked yesterday regarding when you get a follow-through day, and something I omitted was before the follow-through day, you will typically see some leading stocks break out in healthy bull markets. Now, I don't know if we're going to go into such a healthy bull market. This may be a 1 or 2 day pop-off of this news. Maybe we'll fail right here at this, what has been a pivot point so far. You have the low here, you have the break, you have the retest, and the failure so far. So maybe we stop here just under the 6,500 mark. I don't know. But, the question is, do you see any stocks breaking out, before the follow-through day? So if you see like no stocks breaking out, I think a follow-through day probably isn't going to work. And the past 2 follow-through days, I think I mentioned, I'm like, I didn't see anything to buy. I didn't see any stocks to buy on those follow-through days. So at this stage of the game, looking for leading stocks that are breaking out. I mean, all these charts are so decimated right now. INSG is actually breaking out, up 7% today. That's actually excellent from the symmetrical triangle breakout here. That's up quite a bit probably from there. Yeah, 16%. So that's one stock that's working. But I don't think INSG can lead the market. Goose down, AMRN. We got Quad U, which is lower, trying to come back. So we can start clawing our way back here a little bit. But the overall question, so when you get to a bear market like this is only 3 months. Actually, it's 2 months, right? It's 2 months, right? We started the beginning of October. So October, so 3 months, yeah. So 3 months in, it could end. You can have a 3-month bear market. It absolutely could end, and we can reverse and maybe we'll go higher, 10, 15%, You know, maybe we'll go back up to here, maybe place a lower high, something like that. I guess at the end of the day, the question is, are we going to rip roar into new highs at this stage? That's the major question, I think, is are we going to go into new highs if we get that follow through day, and if we see stocks that are setting up to break out. Goose, AMRN, stair stepping. So let's go through these leading stocks. I mean, the first things first, do we have leading stocks breaking out or making pretty good moves? I don't see any good moves. Yeah, I don't catch falling knives either, Miguel. I catch, like, I'm in INSG. I bought this on that breakout. I bought that down here on this breakout day, wherever I bought it in here. And I mean, I bought in a few stocks that look good that I took losses, and this is really the first one that's worked in a while. But INSG looking good. I don't think it can sustain it can lead the market higher. Maybe it can. Maybe it will become a leader. I don't know. I really don't. But so this is my list of kind of market leaders or once leaders. I like to keep an eye on old leaders too. Okay, MDB holding up nicely, but not really. It's way down here. We're not looking for this to break out tomorrow, and it's up 5%. I mean, look at this thing. The chart looks halfway decent if I'll get my data, and we're still way down here, even on a 5% up day. So I don't know what else you can expect out of some of these. TTD, Send, iRobot, Twilio is a newer player, is a market leader, and it's still kind of in the middle of its range. You see here, we go from 62 or whatever to 100, and we're 85. So pretty close to the middle of that range right there. We got here lower. That's much lower. Regeneron is kind of maintained lows. Although it's kind of knocking on a trend line here, Regeneron maybe could get a boost if the market's healthy. Looks like Netflix. Haven't looked at Netflix in a few days. Looks like it's made a few moves to the upside here. Hasn't really overtaken a swing high. This would be a swing high. This would not be a swing high. This would be an area of resistance, however, and getting a little bit elevated today. Earnings are coming up on the 17th. So we have earnings seasons coming up too. And so maybe that's why we're seeing a little bottom here, is because we have earnings season. So maybe they're starting to take some positions for those earnings. Maybe we'll get a follow-through day on earnings. Maybe things will start to turn around based on positive earnings. Now is a newer leading company, not looking super great, but it's holding up. ZS holding up, but not. We're looking for things like waiting, ready to break out, like things bursting through the door. I don't see that in these charts. We only have pretty much one stock breaking out. Nothing else even looks like it's close to a new high. Not really. I mean, I don't have every stock on here. And like I said, some of these are old leaders, some of these are current leaders. In fact, probably now a majority of these are older leaders. But if we go to IBD, I think it's still, there we go. Excuse me. Huh? What are you doing there? Oh, they think I'm not signed in. Anyway, so like I said, when you get a follow through day, you will typically see leading stocks begin to break out. You'll see a few here. You'll see like 2 or 3. You won't see like 50, but you'll see a few leading stocks start to break out. Okay, EIBD. Here we go. This is the thing from. Well, we'll get a new EIBD on Sunday. Actually, it may even come out on Friday. I don't remember exactly when it gets released, but so we can look at some of the leaders from IBD. Let me go back and go through the top ones here in IBD. Then I'm gonna get out of here. It's about 8:10. Got to get ready for Crypto Power Hour. So we got CYBR. So again, it's holding up well. You can see it's above the 200 period moving average. Not in danger of breaking out, however. Team, which actually is in a cup with handle and is in danger of breaking out, but so far not really doing much. It tested the high a little bit there. Nice little pullback, nothing crazy here. This one has earnings coming out, 117. Maybe it'll break on earnings day. TTD's number 3, kind of elevated, not really in danger of breaking out though. VEV, not in danger of breaking out. Fox, not in danger of breaking out now. So we've looked at We've already seen a few of these. Not in danger of breaking out. FTNT, definitely not in danger, under the 200-day moving average. That's number 7 on the IBD 50, by the way, that far under the 200-day. That's not showing signs of strength. Alarm, tightening a little bit for sure, but not in danger of breaking out. MEDP, KL. This is a gold stock. It has broken out, but it's a gold stock, so it's kind of defensive. MPW, looking okay, but still not in danger. PAYC, definitely not in danger of breaking out, living under its 200-day also. Wing, holding up really nicely, but not in danger of breaking out. PLNT, again, holding up nicely, but not in danger of breaking out. Illumina, living lower. So those are the top 15 on the IBD 50. I'm not going to go deeper than that. We can look at some other lists that they have. They have a list called Sector Leaders, which is really good. Team is on Sector Leaders. I think Team's going to be a great stock if the market gets healthy, FYI. FTNT, which we've already looked at. CRM, which is Salesforce. ServiceNow is a Sector Leader. And TTD. So all those are already on the IBD 50. We've looked at a majority of those. So, we're not really, even though we had a good news article today, doesn't mean we're going to necessarily sustain this. We're under a major pivot point, which right now is that level. And we're still chopping within this range. Remember I mentioned several days ago and yesterday, maintaining between this pivot point and this low, we can definitely chop around for a while. And the stock market likes to do that, so we could chop around for a while. All right, guys, well, I'm going to get out of here. Let's see how this market closes today. We broke yesterday's high, so that's bullish. We kind of overtook Apple's FUD, if you will, but that's one FUD in a number of FUDs. Kind of use English loosely, very loosely. But anyway, looking okay today. In terms of volume, we're doing okay. I don't think we're gangbusters, but the China news was good news. We'll have to see how that works out. Let's see what some of the bigger China names are doing. Baidu only up 2%. What's Tencent? TEN. Here we go. TCEHY. I can't remember that. It's such a weird name. Do I have a list of my favorite stocks for now? Not really. I don't really have favorite stocks. I have, I like INSG and I like Team. Those are like the two that I really like. This actually isn't looking too bad. Tencent, that's not looking too bad. I like Twitter. I liked Twitter outside of its FUD, but I think Twitter could come back. I don't think Twitter's dead or something. That Citron report, killing it right here, may have given you a nice buying opportunity on Twitter. I think that could be okay, but I don't like a lot. This Team chart is probably one of the better ones in the market. Same with INSG. Those are the two best charts in the market right now from what I've seen. I mean, not too much distribution in either one. So if the market does rally, those should be two benefactors of that. But that's about it. I don't see a lot that looks super bullish. I mean, there's really nothing that's. I mean, you look at Apple, which is a market leader. It just has a straight line down. May as well put an arrow. I may as well put an arrow down here, and you'll be like, "Yep, that's a downward pointing arrow." There's no bounces in Apple. I mean, Amazon even doesn't necessarily look super good down here. I don't really mind it. I didn't mind it down here on the trend line area, but I wouldn't be catching that. Again, I don't catch falling knives either. Your screen comes out all fuzzy in the stream. Does it? I should be set to 1080p. I have the same settings for my crypto, and I don't have any complaints. My stream rate's a little low. Oh, I will say this: my upload speed as of late has been a little bit choppy. Maybe it has to do with that. But that you're the first complaint I've had in a long time in terms of quality. So maybe just try to refresh, I guess. I don't know. But anyway, guys, I got to run. I got to get ready for the power hour. So, all right, guys. Thanks for joining me. Today is Friday, if I'm not mistaken. Today is Friday. So maybe they'll rally it higher today and dump it on Monday. Who the heck knows? I'm sick of their games. All right, guys, I'm going to get out of here. Stay safe out there. Yeah, we're looking for some leading stocks to break out, and then we're looking for maybe the market to follow. So again, not sure if INSG, which is up here, is a true leading stock or not. So anyway, guys, have a good day. Stay safe. See you on Monday.